So let's talk about something different today. Over the past 2 weeks, we've had a lot of data digestion. Not a lot has gone on to affect interest rates. Normally, we know the same things always affect interest rates, and we talk about that week in and week out. We have labor market reports coming out next week, and then we have CPI usually coming around the 10th to the 15th of the month, which majorly shift interest rates. But over the last half of the month, nothing has changed. However, interest rates have risen about 0.25% in just the past 2 days alone. Let's dig into why. So what we're going to talk about is auctions and Fed auctions. So the Fed auctions off Treasury notes, and those notes are 2 years, 5 years, 10-year notes, basically to the public for people to buy. And what this is essentially the good faith and credit of the United States government. And it's a very important thing considering the US is the global reserve currency. And previously there's a lot of demand for it. But the demand for these auctions, or the demand for these Treasury notes, has been dwindling over the course of the past few years. And again, showed it once again these past 2 days. And why is it dwindling? Well, the consumers' faith in the US government is kind of heading in the wrong direction. Why? Our debt to GDP is just out of control. We're issuing more and more debt, and we're issuing more and more debt not necessarily on things that are positive. I believe we're going to pass, when you look at the levels of what the government spends its money on, right? You got Social Security, you have, interest, you have all these different types of things. Well, interest expenses are now becoming the most important thing, and they're only going up each and every single month. So it's becoming a concerning thing about the US government. So right now, again, the government is auctioning off 4.5%, 5%. Right now, the US 10-year Treasury is at 4.6%, 4.7%. Well, 2 days ago it was at 4.3. Well, when you're auctioning off the good faith and credit, the 10-year Treasury notes at this rate, and there's not a lot of buyer demand for it, well, then what do you got to do? You got to stimulate it. You got to increase the buyer demand for it. So what do? You have to rise interest rates. You got to pay the buyer back more money. So that's what happened. We saw 2-year notes and 5-year notes get auctioned off, and there wasn't as much demand. So now that has to lift those. We have to lift the interest rates. We got to pay back more money so people are buying our debt. And we're seeing this become a major theme. And it's been a problem for the past 2 years. And again, just adding the past 2 days, what is going to change? And when is this going to change is going to be a very important thing. In reality, we've discussed this in the past, something has to break for interest rates to fall drastically. And we're not saying that this isn't going to happen. We've talked about it. CPI has come down from 9 to 3.5. We see labor up to 3.9% on the unemployment rate. That comes out again next Friday. We have seen it softening. But when that breaks, why does that cause more demand for these notes? Well, again, now it's a flight to safety. When you have your unemployment rate increase, it becomes more of a risk off. People aren't as risk anymore. They become more risk averse. So they want to buy things that are sound. And as I mentioned, good faith and credit of the US government, you are insured you're going to get paid back. So when you have the unemployment rate spiking, you have all these things happening, people then flee to safety. They go and search out US Treasury bonds. So when something breaks, you will see a lot more demand for this. When there's more demand, guess what? You don't have to pay back as high as a percentage. As I just mentioned, we went from 4.3 to 4.7 because not as much demand. Well, when that demand comes back, that will lead to lower interest rates. So again, something a little different, a little bit more technical. We'd love to hear your opinions on this. If you have any thoughts yourself, go ahead and feel free to reach out.